Hi everyone, quick disclaimer, Master of the Markets and myself, ASX Trader, is a corporate authorised representative of ShareX Australia. This information is provided as for educational purposes only and does not constitute financial investment advice. A little bit about me, I've got a Bachelor of Education, I was a primary school teacher for a long time, certified financial technician through the International Federation of Technical Analysis, and a certified level 1 Elliotician. All right, let's get into it. Hi everyone, welcome to today's video. Before I kick off in the charts, I just wanted to remind you guys that we have our live event here on the Gold Coast called Inside the Markets on Saturday, the 21st of June. So if you're on the Gold Coast, definitely make sure you get there. If you're not on the Gold Coast, use it as a perfect excuse to come up for a holiday. I was walking around in shorts and a shirt today. It feels like summer anyway. So come up, enjoy the Gold Coast weather and avoid the cold winter wherever you are. A little bit about the event. It's going to be myself, Craig, and Craig. So I'm going to be teaching you guys some everyday skills that I do in trading and investing every single day. From there, I'm going to teach you something, and then I'm going to have you apply it to the charts there and then. So what I'm going to do that's make it a little bit special is I'm going to remove the tickers and make them naked charts, so you have no idea what it is we're talking about. But by the end of the day, when I put those charts up and throughout the day, from the knowledge you gain, you'll know whether or not it's a buy, hold, or sell. Okay. And then that you'll walk away knowing what investments are looking really good for the next 10 years and what investments are not looking good for the next 10 years as well, among some other things. Craig, I've already seen what he's going to be talking about. He's going to pretty much break down how all the markets talk to each other during that period. Really exciting stuff there. And then Craig, our fundamental specialist, he's going to go through some really key things that he's going to be looking at this year, what sectors to look at and why, and a couple of individual stocks as well, which we can then apply to the charts as well and see if we get that bit of TA, FA, Captain Planet style, buys and sells, etc. from there. So if you're interested, guys, it is at Mantra on View in Surfers Paradise. Goes for the whole day, 8 till 6. Bring your laptops. It is a hands-on learning experience. You know, we don't get to do these very often. All our learning's often online, and as good as online can be, nothing beats that in person. Just being able to ask questions and just get amongst it, and also just to meet peers and people like-minded. So great networking experience as well. So if you're interested, the link will be in the description. Make sure you sign up. And the reason I'm emphasizing it now is we have the early bird special that runs out at the end of this month, so 2 days time. So if you want to take advantage, it is cheap. We've kept it really cheap. $199 is literally just covering the cost of the hotel. Okay. So it wasn't about trying to make money or anything like that. It was just about trying to get an online workshop with as many people as possible, get you guys in and show you how easy this thing can be if you know exactly what to do. All right, enough of that. Let's get into the charts, guys, and check out what's looking good this week. Okay, so the first one I want to look at is uranium. So as you guys know, on my YouTube channel, when was it? Let's have a look. It was 1 month ago. So the next big winner, what could outperform? And I was talking about, as you can see from the moon with the little uraniums in it, that was because I saw energy bottoming, and I know uranium is the leader in that space, which is why I started going very long in uranium. So a month ago. So that month ago was back here. All right. So right here, when we came up and we changed MicroStrategy, we've had a really good run on uranium since there. Up a good nearly 50% from that entry. And it is up over 70% from the lows. Massive run. And again, the chart kind of led the news. Trump came out, talked about how he's going radioactive, and that's what happened here. This was the market pump here from that news there. So we have run into resistance right now. This is a period where they have run pretty hot. We are getting a bit overextended. We have kind of hit resistance. You would probably expect some sellers to come in here. Okay, so as you can see here, selling. And, don't have to be a rocket scientist to probably realize you're probably going to get a little bit of selling here again. Does that mean that you should exit positions? No. Does that mean you might want to take some profit? Maybe. Depends when you got in. Depends what your time frame was. Did you enter to make money over a couple of days, weeks, or were you entering because You were looking to make money over a couple of years. You know, time frame is key. But what you need to understand is you might get something like this. You might get something like this. Okay, you might get a zag. So let's say we have topped. It would be common and normal to maybe get a retracement here. All right, so it might do that. It might not as well. Okay, and this is the things that you got to be careful in. And I'll tell you a prime example of that. So uranium, I added this into my long term. I added it into, I already had it in my long term. I added it into my swing account here, back in, hadn't had it there for probably 2 years. And one of the key ones I added in was DYL. And added this one in here, as you guys know, did the whole video about it, blah, blah, blah. But I also added it back into my trading account because if you watched my video last week, I said that I rebought here. Nailed it perfectly. So from there, $1.15 was shot up to $1.50. You know, would have been beautiful. However, that was on the Thursday morning or Wednesday night. There. I actually sold it on Friday there. But I said this in Academy. I just thought it was going to go A, B, and C, but then that news came out and it kept coming up. So that was me, obviously trying to be too smart, thinking, oh, you know, this is it. And this is often what happened. This is what happened to me back in the day, a long time ago, is that I've tried to time every little zig. I'd try and sell there, buy there, sell there, buy there, sell there, buy there, sell, and try and time every little move. And that's not what trading's about. It's not about trying to nail every top and bottom of every move. That's amateur talk. Okay, it's all about risk to reward, and it's all about riding trends until those trends are over. Okay, so what this is this is a higher high, a higher low, a higher high, a higher low, a higher high. And as long as it buys anywhere above here, it's going to be another higher low. And as long as next time it then sells high, it's going to be another higher high. And it's only when it stops doing that do you exit the trend. That is when you exit, or that is when you short. Okay, you do that when the trend moves from an uptrend back into a downtrend. Okay, and it's really easy to see because you can see here going up, and then you can see here, oh, look, they're buying lower. Oh, look, they're selling lower. Oh, look, they're not buying that. There's your change in market structure. That is when you sell, or that is when you exit, or that is when you short, because shorting is where you make money when it goes the other way. You don't short because it's at resistance. You don't buy because it's at support. Okay, you got to wait for the changes of market structure when the trend changes around. It's really that simple. So I just wanted to show you that because that was an example of where, you know, you try and be, and can you imagine if you did sell there, then it went, and then it just went, and then you missed it because you were trying to be too smart. And that's often can be your downfall if you're trying to do that. Okay, but for me, the reason why I said I sold there is because, guys, I've got it in my long term, I've got it in my swing, I've got enough exposure to it. I didn't also need to, you know, for me, it went from $1.15 up to $1.26. It gave me like, I think it was 8% that day. I was like, you know what, I'll take 8% in one day. And it was right in that pocket. And to be honest, at the time, it was looking pretty crummy. It was going up on low volume. So I think if that news didn't come in, it probably would have rolled over. But then the news came in. So anyway, just wanted to point that out there. So uranium is still looking good. Yes, it is at resistance. And yes, you probably will get sellers come in. The probabilities are they will come in, but it doesn't mean they will. So, you know, if you try and be too smart and sell here, then to rebuy here, it just might not come. Just like there's been a lot of people waiting, going, I'll get the pullback, and it just hasn't come. So they're still waiting. If you didn't get in off that entry that I talked about, you've missed out on a 40% move, and you've kind of haven't got it. Okay, so that's uranium right now. Has run hard. There will be a pullback at one point. So you're definitely not buying here. You don't buy at resistance. Definitely not. But you wouldn't be shorting it. One of the other trades I talked about last week was Evolution Mining, and I said this was one that I got in from the weekly outlook and trade. I ended up closing that trade. So, and I closed it up here at It was a 6-to-1 trade. So it was about, yeah, it was right here because it was just above. Actually, let me show you. So, you know, I'm not just making it up. We are, oh, Craig's on. What's he doing?
Our maximum target of a wave 5 between 135 and 140k. An extended wave 5 is normally the equivalent of the start of 1 to the top of 3. And if you extend that from your fourth low, that gives you a target of 135 to 140k. What I've got is I've got a multi 1-2. And I've got a 1-2 here
230k.
from a primary degree. I then have a minor degree 1, 2, 3, 4, 5. So in other words, my extended wave 3. I've now had a wave 4.
All right, let's go back to community, and I'm after EVN. So this was my thesis back in the day. Video update from today's training. Here we go, 8-1. So yeah, so this is me. I talked about, I got in on May 19th. So this is what I talked about last week. You know, why I went long, the update on me holding it at the key level now. I want to see it get above. And then this was it on the 26th. So, you know, a 7-day trade. Okay, 6-to-1 trade closed. 6-1 trade closed, which means, you know, I got in there, which I talked about on the live trading floor, had the stop loss below, and then sold up there. And that gave me that 6-to-1 trade from there to there. So I got out at $9.04 and in there. And the reasons was you got to remember you got 6% account growth there. Okay, that means I was risking 1% of my account to make 6%. That's a 6-to-1 trade. I'm always aiming for a 3-to-1 trade. Okay, which means I'm trying to get 3% account growth for every 1% rate. The reason why I did it is because it started to then get, I'll show you. It'll be easier if I show you here. So let me just get rid of that. So as I'm holding there, you've got to remember when I'm holding there, I'm not just risking, so every time I take a trade, I'm risking 1%. Now, when I'm up here, I'm risking 6% of my account, not 1%. Okay, so from there, remember every day you're holding it, you're essentially buying it. So if it does dip like it did here, let's say, you know, I ended up selling there. Coming back down, I just turned a 6% account growth into 2% account growth. So actually what I ended up doing was that's kind of like taking 4 short trades there and getting them all wrong because I just gave back 4% account growth if it happened. Or let's say that did completely roll over, okay, and come down and get it. And then if I'm wrong and it comes all the way back down, I've just given up 6% account growth. So that was like getting 6 trades wrong, not 1. So, you know, that's what you've got to think about. Like if you're sitting on like a 6-to-1 and you're kind of at some key levels and you think there's going to be, and that's exactly what I said was going to happen. Like that's played out perfectly pretty much. I was like, you know what, guys, there's at least a zag coming here because I was at 1, 2, 3, 4, 5. We're going to get an A, B, C. And I'm not comfortable risking, like I just showed you, 4% of my account there. So that's why I took the trade. Okay. And now I can see here, obviously today it's bounced off and continued its merry way. But yeah, you've always got to think like that. You know, here you're risking 1%. Up here, you're not risking 1%, you're risking 6%. So my thought process was lock in the 6-to-1 because then I can go and find another trade that's back here and only risk 1%. Because by locking in 6%, that means I can get the next 6 trades wrong and be break even. And that's the mindset you've got to have. So from the live trading floor this week, what I identified was energy, oil in particular, were the ones that I was looking at. And WDS was the one that I talked about here. And we were down here at the time, getting off here, and we had this beautiful little move up there. So I just want to show you that one, what we've got on that one. So nice, and you can see it's still there. Come on, log in. Maybe I was on, yeah. So yeah, literally got in off the change of market structure, off here, off the zag zone, identified all that, and now we're sitting up at the moment. So again, at the moment, it's sitting all right. So with your stop below where it is right now, we're at a 2 point, so nearly a 3-to-1 trade already. And just looking for that to come up to the zag zone here. So not much further to go, really close, and that will give my 3-to-1 trade as well. So we'll lock in profit on that one because that will be the 618 at a major support resistance. And again, got to start thinking about it. Again, you've got your decline coming down here. Is terrible at drawing straight lines, as you guys know. All right, so you're starting to kind of get a decline coming down here, just a little bit of a level where it doesn't mean it's going to be a major top or anything, but in a short-term trade, in, out, trying to make money in that short term across the week again. So in early in the week, out at the end of the week, trading that 1 hour. These big market cap ones are quite easy to zoom in on. You can't be doing it on small caps. You just won't get the trade. But something like Woodside's $60 billion company, super easy. So yeah, that's it. Again, 3-to-1. So again, now what is that? I've had 6% account from that one, another 3% here. That's 9%, which means then I can get 9 trades wrong. Let's say I got the next 8 wrong. I'm still 1% ahead. I'm still profitable. So think about that. 2 right, 9 wrong. So what's 2 out of 11? Not even 20% right, but profitable. 20% right, less than 20% right, profitable. Because of the risk to rewards. Get that? That's the key. It's the key to success. So everyone thinks you got to be a good trader. You don't. You don't have to be a good trader. You just got to be a good. You got to pick right trades that give you good risk to reward. 3-to-1. That's it. It's exactly how casinos make money. They just stack the odds in their favor. Doesn't mean they have to win every hand or they have to win 50-50. They don't have to, but they've got the probabilities in their favor. And that's what we're doing as well. Always stacking the probabilities in your favor. You are becoming the casino. You're the house. The house always wins. So Woodside, the other one I took was BPT. So a beautiful breakout through Fib 618, the line with major support. So this was just yesterday. So from here, if you show you here, this was one that I entered earlier in my swing, but I entered in the training account just recently. So I entered in this one back here. I talked about this one with the interns in our chat. So support. So here, when we got up through there, but I just also entered it into my trading account in here. Okay, so off that, that's my candle right there. I've got to stop just below because what I had was, again, continuation of the trend through the 618 through a major support resistance. And again, it gives me a pretty good risk to reward. So from here, you can have a stop below and where would I target this one? Let's have a look. So I'm already through the 618. Let's go back out here and have a look where we might come back up to. So yeah, let's say maybe that's 618. To be honest, I think it's going to actually break it out. So we'll see how we go here. Again, I've got it in the swing and the trading. I'll probably take the trading account off around this level here, unless it gets stopped out prior. Okay, so again, nice 6-to-1 trade, nearly 7-to-1 trade. Win one of them. Again, you can get the, so seeing the difference. These are the kind of things that you're always looking for. Nice, big, minimum 3-to-1. It's not even worth my time to trade something less than 3-to-1. I typically look for 5-to-1, to be honest. As you can see, 6-to-1, 7-to-1. They're kind of like really what I look for, but I will take a trade if it's a good setup 3-to-1. But yeah, another one there, BPT. Others, that was just PLS. I know everyone's been really bullish on lithium and that, but what do we have here? Lower high, higher high, crappy volume. So continuation of the trend. It's still not looking great there. So yeah, no, that's the 6 one I was just telling you guys about as well. And this was the week which I was just telling you about with Thingo. So yeah, this is me closing my uranium trade a bit early. Again, it was still a win, but it wasn't the big win it would have been. But I just did a quick recap on those kind of ones. A couple of other ones from there that I talked about as well was where is it? LDR. So it's one I posted about on the Friday. This is one where, you know, I've been showing you the hourly on those other ones. So obviously if I'm trading the hourly, what am I expecting? Hourly results. So as in I'm looking to make money within a few days kind of thing. This one I entered on the weekly. So again, if you're entering on the weekly, am I expecting to make money in 1 or 2 weeks? No. Am I expecting to make money in 1 or 2 months? No. Am I expecting to make money over several months? Yes. Okay, so again, the timeline is so critical for what it is you're trying to achieve to set realistic expectations. So what I talked about was something like this. It would be very normal for it to come back, test this old resistance as support and keep going. So while it's above this 13.5, extremely bullish. It's doing exactly what it should do. If you can't handle a pullback, you shouldn't be on it. Okay, your stop loss goes where it's invalidated, which is down below this 11 cents. That's where my stop loss is. So anything above that is a normal zig and zag until I'm told otherwise. Okay, so time frames are key. What it is you're trying to achieve. So another one SYR from the other week has come back and we are looking to test this old, so same thing. What we hope this is beautiful Wyckoff accumulation with your spring. Okay, we're broken out and we now want to see this resistance that lines up perfectly with the Fib 382 act as support. So this could be a phenomenal buy right now, but you need to see the buyers stepping in, which at the moment they're starting. So you want to see some nice pivot coming in off here. Let's zoom in. So here we go. This is looking nice. So this is what I'm looking for. Can you see how that's come down a nice low volume? Beautiful. Can you see how we've come into where the buyers should step in on this nice little ending diagonal here and on bullish diversions? Perfect. This is what you're looking for. Okay, this is where the sellers should become buyers. They are. It's doing everything it should do. So we just need to see, depending on your risk appetite, either a nice pivot for the riskier or ideally change of market structure. Get that entry, stop below, and you've done that. So definitely keep an eye on SYR there if you get your thing. And that could be that perfect resistance support flip. For those that didn't get him when I talked about it back here, this is your next chance if it plays out the way we're after. Okay, so keep an eye on that one. And the other main one I want to talk about was silver. I've been talking about the fact that I'm really keeping an eye on this one right now because, to be honest, I think it's going to pop this month. Okay, so the reason why, and I'll just show you why. So market zigzag, and they go in that accumulation public excess. So you can see here, you had the initial, this is what's called an expanded leading diagonal. So 1, 2, 3, 4, 5, which is your accumulation phase. Then we pulled back. Then from here, you can then see 1, 2, 3, 4, 5. Okay. So then the accumulation, the public, the excess. Then from there, this is a textbook ABC flat correction. Okay. So you come A, B, C, and it's where equal high, equal low. It's a textbook. So that ABC there is correct in that whole move, which means the correction's over. This should be the beginning of a new move, which means if you look at it, wave 1, big wave 2, then wave 3, ABC, and then this would be wave, so wave 4, that would be it. Then this would be your wave 5, which will go up to your probably $50 mark. Okay, so then what are we getting? We're getting our 5 up, then you'll get a correction and then take out the high end explosion. But we should get a nice wave 5 explosion, which will be the fastest, quickest move. If you also then combine these out, you'll notice that 618 aligns perfectly there, or that Fib 101. These would be your kind of key levels that you'd be looking for. Nice move up to there. If silver doesn't move like that to that, your miners and your small caps will absolutely pop. Okay, if we zoom in on the hourly, you'll notice, let's go in here. So this was your and this is what happens in an ABC flat, the C is often very sharp and quick. Okay, it's exactly what happened on the SP 500 during the GFC. So I'll show you on the monthly. So this here, can you see how we go A, B, and see how the C is really sharp? And that's because the C is really impulsive. Okay, so see how the A went from 0 to 3 years, then a long drawn out B, then the C went from 07 to 09, but that's only a year and a half. So it's half the time of that one. That's what the C is. It's supposed to capitulate people. Okay, that's exactly what is happening on silver right now on that daily one, is that we had the exact same setup. See, longer drawn out A wave, drawn out B wave, sharp C wave, exact same setup. So this should be wave 1 of wave 5, and then a shallow pullback, which you can see has only come to the fib 382. And it's bouncing off it perfectly, which means that this is a strong trend. Let me get off the log. Okay, perfect. Fib 382 to the literally dollar. And now you can see we're starting to bounce up. Okay, so once we break through here, this will be wave 3 of wave 5, which will be super fast. It'll be like that, what you just saw in uranium. Once we break through 35, anyone that's short will have to cover. So not only are you getting buyers coming in, you also get anyone that's short having a cover as well, which is why you'll get the fast wave 5 explosive top. On top of that, let's zoom into the hourly. What you'll notice is that you've, again, looking pretty good. You've got nice increase in volume coming in as well. So can you see how, let me just get rid of this up here. Can you see how here this move up, and then see how this low took out there, but look, it came down on lower in volume. That's again what happens in a C wave, low volume. See how volume's supporting this move here, then this correction, sideways low volume, and then volume supporting. Just, it's textbook impulse wave. Volume support the uptrend, correction, and then it's ready to break out. Top of that as well, you can see here that you had your wave 1, 2, 3, 4, 5. So that's the beginning of the impulse, your correction, and then ready to go as well. Then I'm going to go into, okay, that's just the charts looking amazing, ready to go. Can't even tell you how good they look. Then seasonality. Okay, seasonality is the next thing as well that can be really powerful. So if you look at seasonality here, you can see we bottom. So down here, we bottom around that June, July period. So it could be end of June, could be mid-June, and then we start to take off and go ballistic. You know, this is over 50 years of data, and all of the seasonality charts would tell you that same thing. So seasonality-wise also tells us that we should be looking around this time as well. You know, for those that have been following me for a while, this was the post I did on October 6, 2023 about gold. Gold seasonality. Gold throughout history underperforms from February to September. It outperforms from September to February. Just as the Earth seasons weather don't change on the exact date of every year, neither does the financial world. They are used as rough estimates. So that's why I'm saying it could be around this time. This is what I call stars aligning. Technicals, macro, and timing all saying the same thing. Lots of signals, just need the confirmation. Okay, and that literally there was October. That was also the time last time I got the bottom in gold here in October. So you can see gold likes to bottom around that October period. Okay, so that there, and again, it was because of seasonality. Again, this here, end of September, October, you can see end of September, October, then it shoots off. Okay, look at that date there, October 6, 2023. Okay, gold where it is now up here at like 3,500. October 6, 2023 is right there. Literally the low. So by combining my seasonality with my technicals, with my macro, that is how I got gold bottom not once, twice. Because you also know I got the low there, back there in that one before it went up. So getting the exact low, imagine getting that $1,800 and then from there you literally only had up only. Just by being able to do a simple thing like combine seasonality with technicals with macro. That is exactly what I'm doing now with silver. Okay, I've got so many messages from people saying, "Oh, I can't believe I missed uranium. I miss. Oh, I can't believe I missed platinum." It's like I can't say it anymore. There's so many things saying keep an eye on that $35 level if it breaks out. And then people go, "Okay, well, how do I get exposure?" Good question. So you can either go and buy the physical silver, go down to bullion dealer, and you've got to store it though. You got to look after it and that kind of thing. So that's good. You know, really good for your mindset, because the good thing about having a physical thing, it's like owning your home. Like if you were to have a little price thing in your home and knowing how much the valuation changed, you'd probably panic sell the thing on a weekly basis. Yeah, like you all probably would have sold your home in COVID if you actually knew how much money you lost. But because you didn't know how much you lost, you don't have a choice. You're hodl. It's your home. You have that same mindset with physical gold and silver. You don't know how much it's kind of going up or down because you just got the physical thing, you store it away, and you kind of set and forget, which is why it's quite powerful to use it that way. So, you know, it's good for psychology, also good that you own it. You know, Tung's done a massive deep dive on the divergence you'll get towards the end of the bull market, because there's only, I think, 4% of the silver in the world that can match the contracts. So when we start going and people start calling them in, you're probably going to have a massive price mismatch as well. If you want the next best thing, you don't want to store in that ETPMAG. Okay, ETPMAG is the ETF, but it's backed by physical silver. Okay, so that's the one that you can buy in your super if you do self-invest, or if you want to, and that is just physical silver, but you're buying the paper version of it. Okay, but at least it's also backed by the physical silver as well. So that's the best way to get exposure on an index. Again, Moomoo. Okay, if you sign up to Moomoo, we've partnered with Moomoo. $3 trades in, $3 trades out. Chess sponsor, you don't have to worry about it going under. You have international and Australian stocks, so you can also trade the silver, which I'm about to show you guys some international ways as well. I've got the link in the description. If you use that one, you also then get 30 days access to this to come check it out and see what it's all about as well. All right, so Moomoo is probably the best way to get exposure to these kind of things like that as well. Okay, so from there, if you're only looking at the ASX, you've got ones like South 32 actually owns the largest silver miner in Australia. However, they're not just silver. It's only like, I think 15% of their portfolio. So, you know, to get that, the only direct exposure to silver on the ASX is this one, ADT. It's the only producer right now, and look at the chart, left to right, just broken out to new highs right now. Okay, so that is the only way you can get exposure to a producing silver asset that's producing right now. Then after that, you've got things like USL, which is one that I just loaded up on literally just recently. Well, I've got it back here when I first got it back here, but just recently in the trading account. So we're just waiting for this to get above 27. Once we get above there, things are looking really good there. ARD is another one. Okay, you're looking for it to get above here again, says there, but again, it's still a nice uptrend. ARD is another one. POL is one that Craig that I talked about at the Gold Coast Inside Live here. We did a free live Zoom for people back in the day, and Pole was one that he identified as the good fundamentals, and then I identified the charts, and that's when it was back here at 22 cents. Back here. So it was literally here at the time, and then from there it just went from 22 cents up to over $1. It was been an absolute rocker. So that one, you're looking for it to get back above there again before it does anything, but it could go sideways for a while. You've got SS1 is another one. Again, this is only in an explorer stage, so it's got a bit of work to do, but yep, again, this one's looking quite nice here. Once you get above this level here, it'll be really nice. It'll start pumping fast then. But I do like that it's the lower equal, and then now higher. So very close to a change of market structure. Above that 74 cents will be really nice. That'll be a change of market structure. And then above that 85 will confirm the low. So there is a bunch of them. If you want to do go through them all, yeah, just check them out. They're all the ones on the ASX, and then there's ones that I have exposure to on the American exchanges, which again you can get through Moomoo as well if you sign up through there. I have CDE, Pure Mining. So this one is looking really nice. So this was one that we got in back here a long time ago. So I've still got this in my account from March last year, and it's been an absolute ripper. So yeah, from $3, and it's just broken out. You can't see it on here, but you will be able to see it on log. It's just broken out of its long-term decline. Look at this. From back here at 95, down, 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 finally breaking out. All right, so yeah, she's been an absolute ripper and looking like much more upside as well on that one. So you can see it was a historical low here. So CDE is one I'm in. AG is one of the first Majestic, one of the biggest producers. Again, this one's looking really nice as well. Once it gets above that $8, it's going to absolutely rip. This is one that I bought also back down around here. I'm not up, I'm up about 10% on this one. So it's definitely been an underperformer compared to something like CDE, but looking really nice. Good volume coming in, ready to pop there as well. And what's the other one I've got? Oh, PAAS. This is the one I got most exposure to, and it's even paying me a dividend along the way as well. So this one we got in back here at 15. So it's not up double, but it's up a decent amount, and just waiting for it to get above. Sorry, get rid of the scribble. Get above here. So nice little ABC running flat, and then just continue on its way back above that $28. So, but again, nice uptrend continuation, ready to go as well. So they are a couple of the American ones that I'm in, that I got in back when I talked about silver back in March here, and we had that nice impulse, but then we've had a lot of consolidation since then. If you just don't want to go individual, you've got the best thing to do is buy SIL, which is the Global X Miners ETF. That's just exposure to all silver miners. That one you can see is very close to breaking out. Like it probably will do it tonight. So beautiful zigzag to the fib 382 and about to change market structure again. Yeah, everything looking really nice on that one. So silver miners looking really, really good. Again, so cheap. These things are still like, that's the peak 2011 of silver last time, $94. We are now at 40. So it's still down 50% from the top of the GFC. So from 17 years ago, it's still down 50%. This is how cheap silver miners are. As you know, things like Nasdaq and that have like done a 10x since then. These things will go ballistic during those runs. Okay. Again, if you don't know why I'm saying that, Nasdaq. So Nasdaq popped in 2000 and bottomed in 2003 and didn't bottom again till the GFC. Looking at silver, look what silver did during that pop. So this is what silver did when the Nasdaq did nothing. It went from $4 to 50. It 10x'd. Silver 10x'd. So you can imagine what the miners did. Okay, so when the Nasdaq's doing nothing, silver soars. Okay, when silver's doing nothing, which is what it had been doing, the Nasdaq soars. Okay, so just money will rotate from precious metals, commodities from paper assets to hard assets. It's really how the rotation can happen in a simple term. So, and then if you want a same kind of like good exposure, but a bit more riskier, is SILJ, which is the Silver Junior Miners ETF. These will pump the most, kind of like your altcoin. So imagine getting an altcoin ETF. So again, this one is looking really good as well. You can see it's just breaking out, just changed market structure. So literally you could buy it now. Change market structure, stop loss below. Again, zigzag off the zag zone, ready to rock and roll as well. Okay, so again, nice, beautiful wave one, wave two, got your expanded and ready. So similar thing to silver as well. So I can't even tell you how good all this stuff is looking, and yeah, I just think this time in a month's time, you'll be looking back very similar to what we did with uranium, and you're going to be like, ah, damn it. But look for your justifications, look for your trade plans, and see what works for you. This is just obviously my plan. I'm very heavy from silver back in March last year, okay? But I have added to some more positions just recently because I do believe that there is a good chance that it will be breaking out any week, and we are just waiting. So I guess we'll know from this time in a month's time to see if it's right. So just waiting for that $35 silver mark there. If you like the video, guys, please like and subscribe. It helps with the algorithm and spread the word. And don't forget, GC Live, come see this stuff in real life. You get a practical application, come see it there. Also, don't forget, we've partnered with Moo. Link will be in the description there as well to come and get. So if you go in a community here, you can take advantage of the Moo offer, get 1 month free to Academy. Come check out what it's all about, and you'll get these things in live, real time. Me justifying, talking about it, doing these weekly trades, weekly outlooks all the time. If you think these YouTube videos are value, come check this out, and you'll see it's just a little cherry on the top of the cake. All right, guys, take care, everyone.